Hi, and welcome to my channel. Thank you for stopping by. Whether it's your first time here, you've been many times, I really do appreciate you stopping by to watch my videos. Today, I'm going to talk about a topic that could unlock an entirely new way for you to build wealth for your retirement, and that is using your pension or your retirement accounts to invest directly into real estate. Not a lot of people I talk to are aware of this being an option, so I think it's something that's worth talking about. So, if you're interested in knowing how you can use your pension funds, your retirement accounts to build potentially a very large real estate portfolio, I suggest you stick around and watch the rest of this video. My name is Ben Danholm, and I am by no means an investment advisor, accountant, or tax advisor, anything like that. I am a real estate broker, and my interest is solely in the real estate side of things. And I've helped a lot of people in this area, Central Florida, to buy or sell real estate over the years. My focus with this channel is to advise people about real estate. So, with that in mind, that's also my attempt at a disclaimer. Anything I say to you in this video is based on my research and what I can find out by searching about the topic and investigating this topic, which is actually a pretty complex one. But you should not take what I say in this video as advice to do anything at all. This is not intended for investment advice, tax advice, or pension advice, or anything like that. If you are interested in knowing more about what your specific situation, what you can do in your specific situation with your pension and how you can use it to invest directly in real estate, I'm happy to help you with the real estate side of things, finding the right properties to invest in. But if you need to know anything about how it affects your taxes, your pension, or your overall finances, you would have to talk to somebody who's a specialist in either of these fields. And I'm more than happy to direct you in the direction of somebody who can help you with that, but I'm not qualified to do that. So this is purely for informational purposes and me passing on the information that I could dig up from publicly available sources. So let's get into it. And the reason I made this is because I've seen so many people who say they are so frustrated with the stock market roller coaster, especially what we've seen this year. So if you're one of those people frustrated with the stock market roller coaster, or you just want more control over where your money is going, this video will open your eyes to some very real possibilities. Now, the first thing we're going to talk about is when we talk about pension funds in this context, in this video, we are talking about individual retirement accounts, things like self-directed IRAs or solo 401ks. We're not talking about big corporate pension funds. We're focusing on how private individuals like you and me can legally and hopefully smartly buy real estate inside our retirement accounts. So this is not for everyone. It requires that you have one of these pension products. So let's start by answering one very basic question. Can you actually use your retirement account to buy a house or an investment property? And the extremely short answer to that question is yes. But you cannot just use any traditional 401k or IRA you have at a big bank. You need a specialized account. It's called a self-directed IRA or a solo 401k. Those are the vehicles, those are the pension accounts that allows you to invest in alternative assets such like real estate. Self-directed IRAs are often abbreviated as SDIRA. We love our abbreviations here. And they give you the freedom to invest in almost anything the IRS allows. And that does include real estate. But you have to know that not every IRA is self-directed. So you cannot go to your local bank and say, I want to buy a rental property with my IRA. They're not set up to handle it. You need a custodian who specifically offers self-directed IRAs. A solo 401k, I mentioned that before, is something that works fairly similarly, but that is designed for self-employed individuals or small business owners with no full-time employees other than themselves or their spouses. A solo 401k offers two major advantages over an SDIRA, the self-directed IRA. First of all, it allows a much higher contribution limit. Secondly, it often includes a loan feature, meaning that you can actually borrow up to $50,000 or 50% of the account value, whichever is less. So if you have $500,000 in your account, you can still only borrow $50,000. If you have $50,000, you can still only borrow 25, so it's the smaller of the two. And you can use that loan. That's the good news. You can use that loan for almost any purpose, including business or personal needs. So if you want to directly buy real estate inside the solo IRA, the solo 401k without triggering a loan, you would buy the property just like with the SD IRA, the self-directed IRA, and you would buy it in the name of your pension plan, not your personal name. So you would not own it as an individual. Your pension funds would own the property. So now that we've gone over the two main vehicles, the self-directed IRA and the solo 401ks, let's talk a little bit about how the actual process works when you use one of these accounts to buy real estate. When you buy property through your retirement account, the account itself is the owner, not you personally, and that's really important to know. The title of the property must reflect the ownership correctly. For example, if you use an SDIRA, the deed for the property will show something like, what shall we say, XYZ Trust Company Custodian, FBO, your name, IRA as the owner, and FBO stands for benefit of. So it would say XYZ Trust Company Custodian for benefit of John Smith IRA, if it's John Smith that owns the IRA. This distinction is pretty critical because of the IRS rules about what is called prohibited transactions. You are not personally allowed to benefit from the property. That's really important. Your pension can benefit all it wants from the property, but you're not personally allowed to benefit from the property. That means that you cannot live in it. It has to be purely for investment purposes. You cannot take a vacation there. It has to be purely for investment purposes. So you cannot have your own vacation there. You cannot let your children live there. And you cannot work on the property yourself. You cannot even mow the lawn because you cannot in any way, shape, or form benefit from the property. Only your pension can. Because any benefit the pension has is, in most cases, tax-free, at least until you close your pension account. So all repairs, all maintenance, and all management must be handled by third parties, and they must be paid from the IRA or the solo 401k itself. You cannot pay them, and you cannot do the work. This is really important to know. It doesn't mean it's a bad it's bad business. It just means that there are certain rules that you need to comply with when you do this. And the penalties or the consequences if you break these rules are pretty severe. For example, if you personally paint the walls or you let your child rent the property, the IRA could disqualify not just that purchase of that property, but the entire pension account. So that's pretty important that you follow the rules, which is why it's crucial that if you want to do this, you need to talk to somebody who can guide you through the rules. So make sure that you follow them to the letter, because the consequences could be pretty dire if you don't. And because if they disqualify your entire account, that would mean that that would mean that it would be treating the entire value of the account as a taxable distribution in the year of the violation. So you could also be hit with some additional penalties if you're under the age of 59 and a half. So imagine if you make a mistake on a $2 million self-directed IRA and they disqualify it. That means that they would add $2 million plus penalties to your taxable income, $2 million plus some penalties for that year. So pretty important that you stick to the rules and you make sure that you work with people who know what they're doing. Also, all expenses related to the property, any property taxes, insurance, repairs, management fee, everything that's related to that property must be paid directly from the retirement account. And all the income generated, like the rent payment or any other income you generate from that property, must be deposited directly back into the retirement account. You cannot mix your personal money with the retirement account's money at all. That could also trigger a disqualification. So now that we've been through all the doom and gloom and talk about what things you can't do and how bad it can go if you do these things. Now let's talk about the benefits of doing this, because this is really what this video is about, the benefits of doing this. Because why would somebody go through all this trouble if it's that difficult, or if you have to follow so many rules that may not be complicated, but if not complicated, at least they are extremely strict? Well, first of all, the tax advantages of doing this are pretty powerful. In a traditional self-directed IRA or solo 401k, all rental income or any profits from the sale of the property, they would be tax deferred. That means that you don't pay taxes on the earnings until you start taking distributions during retirement, which hopefully is at a time in your life when your taxes are less than they are when you're working. If you use a Roth self-directed IRA, the earnings could grow completely tax-free, and qualified withdrawals would also be tax-free. So there are massive tax advantages to this if you do it right. Secondly, by investing in real estate, which is what I personally like a lot about this, is you get a lot more control over your investments. Instead of leaving your financial future in the hands of Wall Street, you can choose the specific properties that you believe in, whether that's single family homes, duplexes, commercial buildings, or even raw land. You are in complete control of your investments this way. And the third thing that I really like about this is that real estate provides great diversification. If you add real estate to your retirement portfolio, instead of turning your entire pension into a real estate portfolio, you're not just tied to one market. You're not just tied to the stock markets. You're not just tied to the bond market or the cash market if you're investing in CDs. You can diversify into another area, namely real estate. And it's a fact that real estate often behaves differently than stocks and bonds, giving you an additional layer of protection against market volatility, which I personally think is great. But there are also some major pitfalls that you need to be aware of, and we have already talked about some of them. First and foremost, there are the IRAs rules, and what they call prohibited transactions. This is the number one risk, and we said it before, and I think it's really important to say it again. If you fail to follow the rules exactly, you could blow up your entire retirement account. But that's not just about real estate. Anything you do that don't follow the rules could potentially blow up your your retirement account. So this isn't something that you can really afford to get wrong. It's not really optional to follow the rules. It's not something you say, I might get away with it. So you absolutely, positively must work with a qualified custodian. And in an ideal world, I say this is not even optional either. You should have an advisor or a tax professional who truly understands self-directed retirement accounts. And if you want to talk to one of these guys, whether it's a custodian company or tax advisor or any kind of financial advice around this, we can refer you to people who are very well qualified. And talking about what we can do for you, if you like my videos, why not hit that little notification bell? First of all, first you need to follow me, and then you need to hit the notification bell. And when you do that, you will know exactly every time that I upload a new video, which means that you will never miss any of the extremely good advice that I put out there. So another pitfall you need to be aware of, to get back to the topic, is that real estate is not liquid. Stocks can usually be sold instantly. You might take a loss, but you can definitely get rid of them instantly. Bonds can be sold instantly. Still, you might take a loss on those, but you can get rid of them. You can liquidate them instantly. But as we all know, if you have ever tried to sell a house, selling a house can potentially take months to sell. So if you need to start taking required minimum distributions, or RMDs as they're called, from your retirement account when you reach the age of 73, and all your money is tied up into a property, that could be very complicated. So this is why I said before, I personally don't think it's advisable to put all your money in real estate. Again, advice about exactly how you distribute your assets in your pension through different vehicles, if you like, bonds, stocks, real estate, that's something you need to discuss with your pension advisor, your financial advisor. But you need to be aware that if you have all your money tied up in Real estate, by the time you reach the age of 73, you have a risk of not being able to withdraw the required minimum. So you need to make sure that you have enough cash in the account to cover the RMD, or you might be forced to sell a property when you don't want to. So something to be aware of, something to plan for when you get closer to that age of 73. Also, it is definitely long-term a good investment to invest in real estate. I know that. I have several properties myself, so I'm definitely one to advocate for investing in real estate, but it does not come without its own problems. Owning real estate through a retirement account comes with an extra administrative burden and administrative fees. You will have to pay custodial fees because you have to have a custodial company to hold the property. You might possibly pay some transaction fees. And to avoid any discussion with the IRAs about whether or not you are following their rules, you will need to keep meticulous records, and that does not come free. So, because as we talked about before, any slip up can cause problems. And if they cause problems, we're not just talking about small problems, it's big problems. So there are some downsides here. Fourth, you cannot leverage your property the same way you would if you owned it personally. If your IRA or your solo 401k wants to get a loan to buy property, it must be a special type of loan called a non-recourse loan, meaning that the lender's only recourse is against the property itself, not the rest of your account or your personal assets. And that is not everybody who can get that type of loan. And also, even if you can get it, non-recourse loans tend to have high interest rates, and they require a lot higher down payments, often 30 to 50%. If you're investing cash from your IRA, I would actually personally prefer to put down at least 30%, but you would have to probably put down 30% or more if you're having a non-recourse loan. And then there's the issue of what they call the unrelated business income tax, or UBIT or UBIT. If your retirement account uses debt financing, like getting a mortgage on the property, part of the income generated could be subject to UBIT or UBIT, which adds a layer of complexity of tax filing. So that's something you need to talk to about your tax advisor, your pension advisor, or your accountant about, whoever specialist you trust on that. So the bottom line of this is using your retirement funds to invest in real estate is a very powerful tool, but it's not simple. You need to go in with your eyes very wide open, and you have to have the right legal and tax support in place. And you need to make sure that you 110% follow all the rules, because not following rules could be catastrophic for the rest of your account. Which is why we are more than happy. If you have thoughts about this, you're welcome to contact me to get a free consultation about what we can do and what people we can refer you to talk about everything that you need to know if you want to do this. It is for a lot of people, this is a good way of diversifying their pension, but you need to talk to experts. You need to make sure you do this right. So to wrap this whole thing up, if you're interested in taking control of your retirement savings and you're willing to do a little bit of work and talk to the right experts, investing in real estate through a self-directed IRA or a solo 401k, that could potentially be very smart. It could be very smart. It could potentially be very lucrative. That was what I was going to say. Anyway, thank you for watching today. If you found this episode, this video valuable, why not subscribe to my channel and drop a little comment below. It would be much appreciated. Any comment helps not just the algorithm spread this to other people who might be interested, but it also helps me knowing whether or not I'm doing something that actually works for you. So thanks again for watching. Bye for now. Until next time.
Hey, it's Bent Danholm, and listen, if you don't follow this channel, there's a good chance you'll never see me again. I consistently create helpful content for those who are currently in the real estate market. This information can be extremely helpful for your buying and selling needs, so be sure you like and subscribe here. And most importantly, leave a comment to let us know if this video was helpful for you. We're here to help the Central Florida community, and we always love your thoughts and questions. Follow now, and I'll see you with our next helpful video.